Hello everyone and welcome back to TradeSmart, where we test objective rules-based strategies and code the best ones into highly customizable TradingView scripts so you can automate your trading. Recently I got a few requests. Someone asked for more mean-reverting strategies and others for simple strategies with few indicators. So I decided to make one. And what can I say, it was well worth it. The strategy I came up with turned out to be one of the best, if not the best forex strategy I have ever showcased. My aim was to create a mean-reverting strategy that works on multiple timeframes and a set. I used a combination of the Keltner channel, the CCI and the RSI. Just take a quick look at the results. Thousands of net profit, low drawdowns and steadily uptrending equity curves on multiple timeframes. Well, this strategy is mind-blowing. Today I will show you this mean-reverting trading strategy which is made for forex and works perfectly across multiple assets and timeframes. To make the backtesting easier, I coded the strategy into pinescript. This way I was able to backtest and optimize the strategy on dozens of assets and timeframes easily. I made a total of 3 optimizations. And looking into the backtest results, I not only saw extraordinary profits and equity curves, but I also found that this strategy only stays in the trade for 4 to 10 candles, which makes it a perfect scalping strategy for low time frame traders. Let me know in the comment section if you want to try out this script, and if I get 10 requests, I will post the code in the description. Don't forget about giving me feedback on whether you like these kinds of videos by giving it a like or dislike. Also, any recommendations and ideas are welcomed in the comments. Also, if you want to support our work and try out our best highly customizable trading scripts made for trading bot automation, be sure to check out our Patreon page and become a Smart Trader tier member. In this video, first I will explain the strategy and show a few trade examples. Then I will show 3 optimizations that I made, and finally the results on the best asset and timeframe combinations. Let's get right into it. First, let's go over the indicators needed and the rules of the strategy. Open a TradingView and set up one of your forex pairs. In this example I will use GBP and ZD 15-minute chart. Now let's set our indicators. Open up the Indicators tab and first type in CCI. Add the Commodity Channel Index. Next up type in RSI and add the Relative Strength Index. And finally our last indicator is something different. It is a custom-made Keltner channel indicator. So if you want to use this strategy correctly, the normal Keltner channel indicator won't be good. Instead we used one of our own modified Keltner channel indicators, and I will leave the specific code in the comment section. Remember that script is not the full strategy, it's just a modified Keltner channel indicator. So what you have to do is to copy that Pine script, then go into the Pine editor, then click on Open and click on New Indicator. Now highlight everything what you see here and paste our modified Keltner channel pinescript code. It will look like this. Now click on the Add to Chart, and it will add our Keltner channel onto the chart. Now let's go over the settings, as we will need to modify a few. Let's start off with the Keltner channel. For the Keltner channel, set its length to 140 and set its multiplier to 1. Moving on to the CCI, set its length to 7, its source to close. Then switch to the Styles tab, set the upper band value to 35 and change its color to green. Then set the lower band value to -35 and change its color to red. And last but not least, open up the RSI settings, change its length to 70, make sure its source is close, then switch to the Styles tab, untick the RSI based MA as we won't need that. Then scroll down, change its upper band value to 40 and its color to red. Finally change its lower band value to 60 and its color to green. With that we have the strategy fully set up. Now let's go over the rules for longs and shorts. As this strategy is a mean-reverting strategy, we will enter long positions when the price is relatively low and exit them when the price reached its mean. Similarly, we will enter into a short position when the price is overbought or overextended to the upside, and exit from that short position when the price has returned to its relative mean value. But how do we do that with our indicators? Here is a valid long entry signal. First of all, the price needs to break below the lower Keltner channel line, which is this green line. It does not need to close below it, even a wick is enough. The second condition is that the CCI needs to be below the oversold level, which we set to a 35. And as you can see on the signal candle, it is well below it. And finally, the RSI needs to be below the oversold level, which is set to 60. As you can see, all of the three conditions are met for a valid long entry, so we can enter into a long position at the close of the signal candle or at the open of the next candle. It might be strange, but with this strategy we are not using any stop losses, as it enters and exits from positions relatively quickly. But if you want to be extra safe, you can use either an ATR-based stop loss or a candle low-high based stop loss, whichever you prefer. Also, we won't have a fixed take profit level. We will exit the position once the CCI breaks above the zero level, which is right in the middle. And as you can see, right after the signal candle, the CCI value was above the zero level. So we will exit the position at the close of this candle or at the open of the next candle. As I said earlier, this strategy is a real scalping strategy. On average, it is in a position for about 6 candles. Okay, now let's see a short example, then I will show you the results. Here is a valid short entry signal. For a valid short entry, first the price needs to break above the Keltner channel. It does not need to close above it, even an upper wick break is enough. The second condition is that the CCI value needs to be above the overbought level, which is set to negative 35. As you can see, during this period, the CCI was below it, so we couldn't have entered into a short, but right on this signal candle, it shoot right through that level. Finally, the RSI needs to be above the overbought level, which is set to 40. On this candle, all of the three conditions are met, so we can enter into a short position on the close of the signal candle or at the open of the next candle. Again, we won't have a fixed take profit, as this strategy enters and exits relatively quickly, and during the 10-year backtest we didn't have a problem with that. But if you want to be extra safe, I would recommend using a 3 to 5 times ATR distance. We won't have a take profit either, as we will exit the position once the CCI line goes below the middle line, which is the zero level. And as you can see, that happened right here. So the strategy will exit the position at the open of the next candle. Now let me show you the other two optimizations I made. One focuses on long trades only and the other on short trades only. Here are the settings for the long only optimization. The rules for the strategy remains unchanged, so I won't explain it again. And here are the settings for the short only optimization. Again, the rules of the strategy are the same. And now let me show you the best performing backtest results for each time frame. I optimized the strategy for the last 5 years of price data, but the results look great even on the last 10 years, so all the backtest I'm about to show you is for the last 10 years. For position sizing, I used a 10K account with a 10x leverage, non-compounding position sizing, so each position is opened with 100K. For fees, I used a $5 per lot commission, which means a 100K position size of the given asset. As my position sizing is fixed, so is the same each time a position is opened, a $5 per lot commission equals to 0.00005% fee per trade. I also applied a 2-tick slippage. As I was looking through all the 40 plus forex pairs that I have tested, I found that this strategy performs best on 6 different pairs. These pairs are AUD-CAD, AUD-NZD, Euro-Swiss franc, GBP-NZD, NZD-CAD, and NZD-Swiss franc. So these will be the pairs I will show results for. To decide which combinations are the best, I compared multiple aspects like Sharpe ratio, profit factor, Sortino ratio, and so on. Let's get started with the best results on different time frames from 5 minutes till 2 hours. On the 5-minute chart, in my opinion, the long and short optimization performed the best on GBP-NZD. During the last 10 years, it took a staggering 105,000 trades, generated almost 5,000% net profit, with a 1.23 profit factor and an 18% maximum drawdown. The equity curve is perfect, but the upcoming backtest results will look the same or even better. Other great performers on the 5-minute chart are the long optimization on AUD-NZD, the long and short optimization on AUD-NZD, and the short optimization on AUD-NZD. Moving on to the 10-minute chart, the best result I found is for the GBP-NZD pair using the long and short optimization. Throughout the last 10 years, it took 53,000 trades, generated 3,500% net profit, with a 1.29 profit factor and 17% maximum drawdown. Again, the equity curve is perfect, it's stable and steadily uptrending. Other great results were achieved on odd NZD. Finally, the long-only optimization on odd NZD. Moving on to the 50-minute, the best combination I found was the long-only optimization for GBP NZD. This one took 16,000 trades, generated 1,800% net profit, with a 1.3 profit factor and 15% maximum drawdown. This strategy also achieved great results using the long-only optimization on odd NZD. On the 30-minute chart, the long-only optimization performed the best on odd NZD. From 2013 till 2023, it took 8,200 trades, generated 1,169% net profit, with a 1.42 profit factor and an 18% maximum drawdown. The equity curve is great as before, steadily uptrending without any significant pullback. On this time frame, I found a few noteworthy combinations too. The short-only optimization for AUD-CAD and for Euro-Swiss franc. Moving on to higher time frames, on the 1-hour chart, the AUD-CAD short optimization performed the best in my opinion. During the last 10 years, it took 1,005 trades, generated over 400% net profit with a 1.465 profit factor and an 18% maximum drawdown. Now the equity curve is not as great as the previous ones. We have a few rapidly uptrending periods, but a few more significant drawdowns too. Altogether, for me, the overall curve is still fine. I found two other good combinations for the 30-minute chart, the long-only optimization for odd NZD and the short-only optimization for Euro-Swiss franc. And finally, on the 2-hour chart, the long-only optimization worked the best on odd NZD. In the last 10 years, the strategy took 2,056 trades, generated 519% net profit with 1.29 profit factor and 20% maximum drawdown. The equity curve looks good with small pullbacks and a bit of sideways period in the end. And that's it. As you can see, the strategy is outstanding. It performs great on multiple timeframes and assets. My favorite combination though is the GBP NZD 15-minute chart with the long-only optimization. Which one do you prefer? And what do you think of this strategy? Have you ever found a better one? Let me know in the comment section. Also, if you like this video and want to see more, don't forget to drop a like, subscribe and turn on the notification bell. If you want to support us and get access to our best scripts and optimizations, become a Smart Trader tier member on our Patreon. As always, thank you all for watching, have an amazing day and see you in the next video.